Hi, good afternoon, everyone, and welcome to our next episode of Bread Couch Talk. Today we have Diego Merlos with MBM Solutions. Thank you for joining us.
Thank you for having me. Let's talk about credit.
Well, you know what? Let's jump right into it. I had a couple of questions for you, but my first question is this: as far as like charge-offs and collections, can those be taken off a credit report, or you know, what's the process, and how bad does that affect a person's credit?
Absolutely. Mm-hmm. So anything that's on somebody's credit report has the ability to be removed.
Okay.
Right. So collections, charge-offs, late payments, bankruptcies, taxings, literally anything that's on your credit has the ability to be removed. Okay. So we do it through a dispute process. That's where we send letters to the credit bureaus, mm-hmm. and we try to get that negative information taken off.
Okay. Perfect.
That's good info. Will having a mortgage affect or benefit your credit?
It will help it, right? So traditionally speaking, what they would like to see the credit bureaus is 1 term loan and 3 revolving accounts. So a term loan is considered a personal loan, an auto loan, or a mortgage. So a term loan has a term, it has an amount, it has an interest rate, and that doesn't change typically, right?
Yeah, a lot of people think that having a mortgage will just lower their credit score. So
no, it does not lower the credit score, right? And there's 2 types of credit. So then again, there's term loans and then there's revolving credit. Mm-hmm. So your revolving credit is your credit cards, department store cards. And the reason that they call them revolving is because it's like a revolving door, right? Once I pay it, I can use it again. Mm-hmm. And on a term loan, it's not like that, right? Mm-hmm. I pay the same amount every single month and nothing changes. Mm-hmm. The reason that they would like for you to have 2 of the types of credit is because if you only have term loans, it looks like you only know how to pay a specific amount every single month, right? Mm-hmm. And if you only have revolving accounts, it looks like once you pay it, you anticipate to be able to use it again, right? Mm-hmm. So you need to have a mixture of both.
Oh, that's
so
very
interesting. A car loan would be a term loan.
A car loan, yes, exactly, right? So it has an amount, mm-hmm. It has a term. So a car usually 5 years, 6 years. So if you're gonna finance a car for $20,000, it's gonna be a 5-year term. Mm-hmm. It'll have an interest rate and it'll have a payment. Typically, those things do not change, right? Perfect. On your credit. So again, if I'm on a diet, right, and then I have pizza and donuts in front of my face, a burrito, whatever it is, I'm most likely going to indulge. Right. So it's the same concept when we're talking about offers and credit offers. Mm-hmm. You're more likely to try to get a credit card when you see constant offers coming to you. Right? Yeah. So a really easy trick for
maybe I'll get it.
Right. So a really good and easy trick for you guys out there is to opt out of those offers. Right? Okay. Because I'm not going to take a bite of a pizza if it's not in front of me. Sure. So if you don't have those offers in front of me, mm-hmm. you're less likely to apply, making you look less like a risk.
Right.
So then your credit can potentially go up another 15 points just by opting out of credit card offers.
Yeah, I'm guilty of that myself. I'm like, do I? No.
Right? So we get excited.
It's so true.
Right? Especially when
wow, I got one and throw in the trash.
Exactly. Especially when they say, when it already has your name on it.
Yeah.
They just call it activated.
Just call it activated?
Right? That's typically how we all start off with credit, right?
Right.
I think on my 18th birthday, they already knew. Yeah. I said, hey, you can get credit. Here's your credit card.
You're 18 now. Here.
There you go.
Discover card. all my 3 daughters, as soon as they turn 18, they all got a Discover card offer.
And they should. Yeah. And they should. It is very important for us to start to establish credit and establish it early. Mm-hmm. Okay, 35% of your credit score is based on history, right? Its ability to repay back debt.
A lot, and I think you told me a different perspective on how this works. But on student loans, I see people who have like a late payment on a student loan, and you were mentioning something earlier about if there's like 5 or 6 student loans. Right. How does that work? How does that affect?
So please pay your student loans. Make sure that they're in deferment or forbearance or whatever it is. But that's one of the worst things that you can do is to default on a student loan. And the reason is, a student loan, let's say they let me borrow $10,000, right? Mm-hmm. I do not have one loan for $10,000. I have 5 for 2.
5 or 6, yeah.
5 for $2,000. And the reason is because they disperse it through semesters or quarters or whatever it may be. So when I have one late payment, I don't have one late payment. I have one late payment on 5 accounts, reporting to 3 credit bureaus. So now I have 15 negative blemishes on my credit report. Right? So then
one just like
exactly
just trickles down to
exactly. So and then yes.
I didn't know that.
And FYI, student loans is the only thing that you cannot include in a bankruptcy.
Yeah.
That will not disappear.
And child support.
Exactly.
Yeah.
So,
How do you know?
so anything, and speaking of bankruptcies, you know, a Chapter 13 will stay on your credit for 7 years, right? A Chapter 7 will stay on there for 10 years. Okay, so a Chapter 13 is when you have a payment arrangement and then you pay a portion of it back, right? And then the other one, there is no payment arrangement. That's why it's on there for longer. Okay, that does not mean that you cannot purchase a home, right? Typically within 1 to 2 years, you can start to purchase a home again. You can start to rebuild credit immediately after you get bankruptcy, right? You're just gonna have to bite the bullet on high interest rates, and things of that nature. And certain banks, sometimes they just won't touch you. Right? So I always tell people, you really, really want to make sure that if you can avoid bankruptcy, try to do it, right? Because let's say I have a nice car and I have a super nice suit, and whatever it may be, and you come into my office and everything is crimson and clover, right? He's doing well.
Yes.
But then a probation officer comes in.
Whoa.
He's doing well now. He's doing well now. But at some point, something happens. Right?
Yeah.
So that's what bankruptcy can be. Even though, again, you can start to rebuild credit, there are certain banks that they look at this as like, well, yes, you have a 750 FICO score, but at one point you were so responsible that you either had to liquidate all your debt or that you couldn't pay and then you had to pay only a portion of it. Right? So it's recommended that, again, if you can avoid bankruptcy, explore options. And some of those options is just paying off debt. A lot of us do not know how to pay off our debt, right? So what we end up doing is we focus on, let's say I have 5 accounts. I'm gonna pay all those 5 accounts off at once, right? I'm gonna do $100 on each one, that's $500. They're each gonna go down a little bit each time. So my recommendation was just to have a strategy. Put a minimum payment on everything else, let's say it's $25. So 25 on 4 gives me $100, and then the other 400 I pay to one specific account. So these go down a little bit, and then this one goes from here to here. Minimum payment, so I don't miss a payment, and then this one's paid off, and then I move to the next one.
Oh,
Right?
there you
So
go.
That's a good
exactly,
strategy.
right? So it's just being strategic. Debt consolidation loans, they do work sometimes, but a debt consolidation loan, most of the time, has no collateral. So the interest rate is higher, and the probability of getting approved is lower, right?
Well, some people consider that also like a bankruptcy as well when they do debt consolidation. Like I've heard something to the effect that, you know, if you do a debt consolidation and it's sort of like not through the whole process of bankruptcy, but like kind of like people will look at it as the same, like, hey, well, you couldn't make payments, so now you
Not necessarily, because debt consolidation, what it means is instead of paying Wells Fargo, Capital One, American Express, Citibank, and whatever other credit card you would like, I just get this loan and then this one pays it off. Right? And then I just pay them. So some people do it that way because they just don't want to pay so many different people, right? And sometimes it does make sense because my credit cards, they say they have a 24.99 interest rate. And then if I get a debt consolidation loan and let's say it's in the teens, I'm saving interest, right?
But they negotiate for you, right? Hiring somebody to negotiate the accounts for you.
If they're closed, right? If they're open, you could just pay them. And I always tell people you don't have to pay off your credit cards, right? Having good credit means your utilization, your balances should be less than 30%, right? So you don't got to pay them off, just get them to below 30%, right? So 1/3 of your credit, 35%, is your credit history. It's ability to repay back debt over time. We need to know that if I let you borrow money, are you going to pay me back, right?
Financially responsible.
Exactly. And then it's also risk, right? So that's where balances come into play. If I have a $1,000 credit card and I owe $999, it looks like I'm going to be late. I look like a risk. It's an algorithm.
Right.
It's an algorithm on whether the client is going to be 30 days late or not.
Right. So you can see it already, like, yeah, he's going to be late.
Exactly. So if you have your balances at below 30%, you look less like a risk. So your credit goes up. So that's a really easy way to be able to increase your credit, is to lower your balances, and this is on revolving accounts, right?
Right.
So I'll touch a little bit on revolving accounts.
Really quick, so I hear you saying 30%. I've always under the impression it was 50%. So it's 30?
So actually for excellent credit, 0 to 9.
Oh.
Wow.
Right? It's a little unrealistic, right? 10 to 29, 10 to 29 is good, right?
Okay.
So not 30, less than 30. If I have a $1,000 credit card, I don't want to owe 300, I want to owe 290. right? And you can exceed those limits, and sometimes it happens, right?
Right.
Holidays.
Yeah,
Right.
of course.
Oh, we're all guilty of that.
Exactly.
Yeah.
Right. So the balances can go up. So just a quick and easy way to again shoot up your credit is to keep it at below 30%.
Okay.
Right. And again, that's for revolving accounts.
Right, but you know what? I had a client not too long ago. He came, he brought his paperwork and everything, and I asked him, how do you think your credit is? And he goes, oh, I have excellent credit, I don't owe anything. And so we checked, the credit report said that he didn't owe anything, but then he didn't have FICO scores. Everything was paid off. Do you know why? Because I know that he hadn't used credit for maybe like 1 or 2 years.
That could be why.
Goes
Because he doesn't have anything reporting.
Yeah.
So he doesn't have history.
He does have history, but a lot of times, like for example, like
Or
a term
it's
loan, a loan will close, right? So
Right.
FYI, don't ever close any revolving accounts. This is forever, right? Because once you close that account, you lose all the history that you've had with that account, right? So let's say I've had a credit card since I was 18, I'm 30 now, 12 years, right? And a lot of the times we need to understand that we should be getting our information from professionals, right? Because we hear a lot, and people who are successful, who have money, or who think they know, don't know, right? They have the best intentions, and
Yes.
sometimes logic in this case can really affect us, right? So I can tell you, hey Tina, so you have a credit card and you're paying an annual fee, right? It's $49 and your interest rate is 24.99%. Why are you using it? It's costing you money. You should close it. To a lot of people, it makes sense, right? I don't want to pay the annual fee. I don't want to pay high interest. But is it the best thing? Absolutely not, because you're losing all the credit history that you have with that. So one of the ways that you can kind of get away with that is you can always ask for a reimbursement. Can I get my annual fee back? And you can say one of two things. I never use this card. Why are you charging me? I say, oh yeah, you're right. Here's your $39 fee back. Or I use this card all the time. I'm a high value customer. Is there any way that you can give me that annual fee back? Absolutely. Right. So it's really important for us to also establish a really good relationship with our banks or our credit cards. Right. As we talked about earlier, your bank, who you bank with, should be your first line of defense when we're talking about credit. Right? If I'm going to borrow money, I'm going to borrow money from my mom, not from somebody I don't know. So my bank account in this case is my mom, because my mom knows that I make my bed and I do my dishes and whatever it may be. I don't do that, by the way. But my bank, most of the time, they see my direct deposit, right? They see that I have no non-sufficient funds, no overdraft fees, and I have a good relationship with them, right? Most banks now are relationship based. Right? It's not sales anymore. So when you go into a bank, hey, you went into the bank today, was there somebody at the door to greet you? Rate us from 1 to 5. That's what they get their bonuses on. Right?
Actually, I've seen that, yeah.
So when I was a banker and a business specialist, it wasn't like that. Hey Diego, by the end of the quarter, you need to have this many accounts, this much loan volume, this many credit cards, this many partner referrals. It's not like that anymore, right? It's customer experience.
Yeah, you're actually right, yeah. You walk in and Chase, it's like, they got
Exactly.
coffee, they got all kind of stuff too, right? Yeah.
So the more things and the more products that you have with your bank, the better the relationship, the more likely they are to let you borrow money, to waive a fee, to do anything like that. Right? So it's very, very recommended that you guys maintain a good relationship with your bank. An easy way to do that is to have more products. Right? Because if you come in and you have a checking account and then I can't reverse your fee, you're probably going to tell me, oh, I'm going to go to Chase. Later. Right? But if you tell me, and this happens, where I sometimes don't get what I want, I just leverage my relationship, right?
Yeah,
oh, really?
exactly.
Because I've banked with you guys since 2006.
Yeah.
I have a checking account, I have a savings account, both of my nieces have accounts. I have credit cards, I have business accounts, I have a safety deposit box, whatever it may be that you have with them, they don't want to lose that relationship, right? So once you threaten to take that away, oh, hold on, Mr. Customer, maybe this system is saying that we can't do it for you, but let me go talk to my manager real quick. Let me talk to my manager real quick, right? So it's establishing that relationship with the bank. It's something that at MBM we definitely try to instill in our clients, right? So we educate our clients not only on credit, but on personal and basic finance, right? How to manage your guys' bank accounts, banking, checking, savings, credit cards, things of that nature, because if we can leverage it, that's going to be the best thing for our clients.
Perfect. Oh,
That's
nice.
good.
Very good. We're gonna bring you to, so you can train our agents here to
Absolutely.
Yeah.
educate our
It's on the
agents.
calendar for next
Yes.
month.
Next month, right? We're doing,
Yes.
Exactly, thank you.
April 20th.
There you go,
Right.
spill it. Go ahead, tell everyone.
Flyer presentation, I'll be here, Tina Marie will be here, we'll all be here.
Yes,
Um,
including some other professionals.
Exactly.
Title rep, who else is coming?
Red Diamond Home Loans will
There
be
you
here,
go.
as well as we have other
Hopefully.
affiliates coming.
Yeah, hopefully Legacy Escrow also.
Yeah.
Legacy Escrow, come on!
Trying
Come
to
on, Brown.
try to provide you guys with as much value as we can. And like I said, my business model is providing value through education, right? Because credit is a game, and it's a lot easier played when you know the rules.
Well, there you have it, everyone. You heard it from the expert himself, Mr. Diego Merlos. And Diego, can you please tell everyone how they can reach you?
Absolutely. MBMCreditSolutions.com, MBM Credit Solutions on Facebook. Call or text 909-295-6263.
Awesome.
Thank you.
Awesome. And any agents out there who want to join our office, please give us a call or comment below. Any buyers or sellers out there who need help buying or selling, please give us a call. Alex, what's the number?
The number is 1-800-286-1036. And don't forget to like, share, and subscribe to our YouTube channel to be entered into our weekly drawings for this episode.
See you next week.
Bye-bye.
Bye.